At the conference today, we talked about how financial services and lifestyles are coming together to create a new category called Finlife, and how the difference between these two separate industries has been blurring. And you have e-commerce, lifestyle companies, ride-hailing companies getting progressively into financial services, and financial institutions embedding their services into lifestyle products like chat applications to ensure that they are part of the life of consumers in the most meaningful manner. Financial institutions need to look at prioritization in terms of which segments they want to prioritize and which kind of models they're looking at. So there are different kind of digitization models available for the financial institutions. They can look at to be at the cutting edge, that they want to drive the changes and they want to build the stuff themselves. Then there are models in which they would embrace best of breed technology and distribution partnerships from outside. So they'll work with startups and scale-ups and the new generation e-commerce chat companies to build an ecosystem model for digitizing their business and embracing their customers. And the third model is where there are financial institutions who want to focus on what they are best at. For example, the infrastructure, the financial crime compliance, regulatory reporting, and they create what we call as utility banks to enable other companies to build solutions on top of it and serve the customer. So, which is why there is, I would say, a wide variety of options, and the fact that more and more customers have mobile phones with internet connections, the digital awareness in the consumers and SMEs are increasing. There is strong governmental push to embrace digitization. There is a very, I would say, fertile environment for innovation to flourish, and which is why these are the three different models, and different financial institutions could land up anywhere. And just being doing everything yourself may not be the best option for every bank. For example, if you're a small bank in an emerging market economy, it might be a better option for you to procure some of these technologies from startups, scale-ups, and then build on that. If you have a very large multi-country financial institution and you need some customized solution, then you can probably build, buy, and mix of those things together. So what we see is a perfect time in the history of financial services where we'll see very new category and pedigree of winners to emerge in the coming 3 to 5 years. In the culture where we are looking at open banking, ecosystem partnerships, everybody is looking at the definition of consumers' expectations have evolved. The definition of consumer delightment has changed, and which is why people always had partnerships. Now, the kind of partnerships have evolved, the kind of business models behind the partnerships have evolved, and that's a part of evolutionary life cycle. And we see that as we see more and more digitization, more and more clarity around how the privacy laws are going to work, how the data security laws are going to work, a new generation of solutions with customer as the center, where a customer will have options and customer will have opportunity to define how their data can be used to deliver services to them, will create a new realm of opportunities. And that is where we see these new kind of partnerships where either a bank would lead or a non-bank would lead. Those models will emerge and evolve, and that evolution is what keeps it thriving. The beauty of fintech, startups and scale-ups is every scale-up was startup at one point of time. And which is why they have gone through that journey, and not all startups would reach a scale-up stage, and not all scale-ups would reach an end goal, which would be an IPO or an M&A. So it's an evolutionary cycle, and you start with a larger number of players, and then it narrows down, and which is why it's a journey, and which is where the partnerships comes in, innovative business models comes in, and that showcases that it's a vibrant culture. If you do not, so you need enough. So think of it like a food chain. You need a grass-eating animal, and you need an animal-eating animal as well. So that's what is a food chain. It keeps the ecosystem balanced. And when there are no tigers, a desert happens. because the animals would graze away all the land and there is nobody to keep that population in. And which is why the talent recycles. Because sometimes the companies work and they go into bigger one. If they don't work out, the talent gets recycled. So, which is why in order for the innovation ecosystem, like a food ecosystem needs to survive, there needs to be evolution around that line. Some companies will grow, scale up, some companies will not. And that's part of the journey. Regulators across ASEAN are very open, very proactive in terms of how they want to support innovation. And what they have done is they have taken a proactive stand around what does the regulation mean for them and their countries. Because there are different definitions, different aspirations, different needs. For example, getting bank accounts to people might be a challenge in few of the ASEAN countries, and it may not be a challenge. Preparing for retirement planning might be a more urgent problem for some economies than the other ones. So which is why what regulators have done is they have common set of themes, but they have created their own customized flavors to suit their needs and their aspirations and their considerations. And it's I would say a friendly kind of structure where regulators are very keen to learn from each other and also keen to ensure that they can attract the best talent, best companies, because there is also a kind of, I would say, everybody wants to attract the best minds to their countries to build those solutions. So it's a very collaborative and aspirational ecosystem around regulatory players we see.